Hey everyone, I'm Jeremy Szafron, and this is Kitco News. Now on the show today, we're peeling back the layers on the gold market following a year that saw its fair share of ups and downs. The World Gold Council's latest gold demand trends report for 2023 was recently released, and it's packed with insights into how gold fared against a backdrop of economic uncertainties and geopolitical events. Now, notably, the January U.S. CPI report showed consumer price growth reaccelerating, with CPI rising 0.3% from the previous month and 3.1% annually, while core prices excluding food and energy held steady at a 3.9% growth. Now, in light of these developments, gold's story in 2023, with prices hitting unprecedented highs, becoming even more compelling. Now, here's what you need to know. Gold price peak. Now, 2023 closed with gold prices at unprecedented highs. Backing gold, central banks came close to topping their historic buying spree, and investor sentiment shifts. Despite robust buying elsewhere, ETFs saw notable outflows. And supply on the rise, recycling efforts contributed to an uptick in overall gold supply. And market movers. China emerged as a key player driving demand in a very significant way. We'll find out why and what other countries were buying. To help us unpack all of this, Joe Cavatoni, senior market strategist from the World Gold Council, is here to dive deep into these points and more. Joe, thanks for coming on with the show today with us.
Thanks for having me. It's great to be here.
Of course, we got lots to get to, so I'm going to dive in here. Given the LBMA gold price reaching a record high back in December, and the latest CPI numbers revealing a little bit of an uptick in inflation here, can you discuss what drove gold's exceptional performance last year and how the current inflationary pressures are shaping investor attitudes? I mean, what does this mean for gold's positioning in both short and long-term investment strategies?
Yeah, lots to unpack, and you're hitting on all the points that people need to be aware of and pay attention to. So there's two things that I'd say that would characterize gold's performance over the course of last year. One is the very obvious headwinds that come from monetary policy, particularly how the U.S. Fed is going to continue to deal with its concerns and its inflationary tactics of raising rates. And I think that there's a lot to talk to, but we'll pause on that and also highlight the other factors that I think are important to remember to support the gold price. It's a global asset. It has global forms of demand and consumption, and those played out quite significantly, both tactically and strategically. Tactically, we had two moments in 2023 where you saw conflict in the Middle East and you saw a bank crisis earlier in the year that moved the price tactically. And then strategically, you see ongoing and continued demand from what you've highlighted, which is the central banking market, which has basically been near record consumption in terms of 2023, about 1,045 tons, just about 40 tons off where we were in 22, which was a record year. So lots moving the market there. But again, the headwinds in that monetary policy really kind of continuing to put a damper on the upside potential for where gold can go when people are concerned, investors are concerned about trying to get a flavor for how things are going to land in the economy.
Yeah, no, absolutely. And we got lots to unpack there, too. I mean, rate cuts might not be on the horizon as quickly as the market has priced them in, especially after seeing today's or the latest CPI number. But how might a significant reduction in inflation or maybe a shift in monetary policy towards easing impact this attractiveness to investors? And are there any historical instances or data points that might offer some insights here?
Sure. I think the first thing that we'd want to make sure that we understand is we're probably coming out of an inflationary environment that's unique. So I think that what we're seeing a lot, and this is having impact on the gold price, is people looking at history. So I think in 2000, 2006, 2018, we have these moments where we had rate rising environments and we had inflationary pressures. We had environments in terms of the financial markets that were leading to the monetary policy shifts. But I think we're coming out of a unique set of circumstances this time, and trying to use the past to guess and predict what's going to play out into the future is a bit more challenging. So the COVID environment, which brought on the inflationary type of an environment, has led us to a world where we're actually seeing rate rising environment, which has actually been something that puts pressure on the upside on gold. So you have rates, real rates in particular, attracting investors to the risk asset environment, bonds and equities in particular. So as we see that taper off, As we see rates and real rates in particular come down, you'll start to see the attractiveness of gold come back into play. And that safe haven, which has been underpinning everything that gold's done this year, past 23 and then 24, continues to be that and an environment of more attractive appeal to gold in an environment where real rates start to lower and reduce. So what we're looking to see is when, and I think a lot of what's happening with the price today is the speculators are moving around trying to get themselves positioned in the gold market to say, okay, so we see further economic data and information that's coming through. Maybe this rate cut of March or June, maybe we need to reassess when that's going to happen. So you're going to continue to see the volatility short term in gold, but you're also going to see that pent up investment demand ready to move when there starts to be more clarity. So more of a midsummer type timeline for the expectation around rate cuts. And that's when we'll probably start to see clear indications of high profile investment dollars going back into the gold market.
Right. Speaking of high profile, central banks, particularly from China, Poland, Singapore, Libya, and the Czech Republic, and I guess India as well, were significant players in gold market in 2023, nearly, as you mentioned, matching their record purchases in 2022, while gold-backed ETFs saw outflows. So how does central bank purchases contrast with the ETF outflows that we've seen? This shifts such a complex picture in consumer confidence or in investor confidence here. Can you talk to me a little bit about these factors?
Sure. One thing that we want to make sure people have an appreciation for is what central banks are considering their profile and their reserve portfolio profiles looking like over the next 5 years. We ran an annual survey, and 2023's survey indicated to us that both the dollar and the euro would be currencies that central banks would be looking to diversify away from. They wouldn't be dropping them outright, but they would be looking to do the diversification away from those two currencies as a mainstay in their reserve portfolios. And actually, what we've seen for the last 14 years has been an ongoing trend of central banks, in particular the emerging market central banks, buying gold. Now, again, it's been done at record paces over the last couple of years, and the central banks that you've highlighted have definitely been the largest consumers. And we see the environment not only from a reserve currency portfolio diversification perspective continuing to be supportive of this trend, and ultimately gold continuing to be in the mindset of the reserve portfolio purchasing profile. It's really a ripe environment for gold for the central banks to continue to find a place for it. I think ultimately what you're seeing is diversification, dollar asset diversification. But again, onshore concerns around their own homegrown inflation and the need to basically manage the potential and have a liquid asset in the portfolio. I think the case is really strong to continue to see emerging market central banks consume gold. And I think ultimately what you're going to see is maybe not record levels in 2024, but a case that will continue to be strong for the asset.
Yeah, interesting. I mean, you talk a little bit about the report about the OTC markets here, the total investments likely being higher in 2024. Talk to me a little bit if this has changed now with these new data, with the new economic data that's out. Has anything surprised you, or are you looking back at the report and saying, okay, maybe we should be a little bit more cautious here?
No, I think what we're going to continue to expect to see into 2024 is that OTC market that we make reference to will continue to be a large component of what we track and what we see in terms of demand. Right. When we talk about investment, it's very easy to go look straight at the ETF market, but it is a very small component of the global consumption of gold. Bars and coins, OTC markets, these are large components of where demand gets picked up in the gold space. So I'd say to you that while the ETFs are telling us one story around easily trackable investment dollars, the OTC number is telling us a different story, which is actually that globally, diversification into gold is probably playing out in a much more substantial way. So yes, we're seeing high profile flows in ETFs and maybe some speculative flows that come along with that playing out. We had a down year in 2023, and this first month or two into January and February of 2024, you're seeing again outflows, particularly U.S. outflows, particularly concentrated in the assets that get used very quickly to be a liquid instrument. I think what the OTC market is telling us, and the bar and coin market is telling us as well, is that movement towards safe haven and diversification in portfolios is continuing to play a big role. And you see that in places like China, you see that in Asia, and you see that, again, with these central banks. This is a diversification of a liquid asset into a reserve portfolio. And it's actually encouraging for us because while it's harder to track it, it's a little bit more opaque in terms of what we can see and where we can attribute it. We can see it in terms of just the balance between supply and demand.
Let's talk about China there a little bit, Joe. I mean, you talked about jewelry being up 10% in that country. I'm curious with the economic climate and some instability there. Are there factors that you're thinking about? What are you looking at in the Chinese market for the data this year?
I think what we're keeping a very close eye on are the economic factors that are playing out, what's happening onshore for domestic investors, and actually a very interesting set of data that's come up, which has shown us that gold as a pure investment is actually starting to get more interest and more momentum onshore. So I think that jewelry continues to be a mainstay for the demand in China, but we had a 28% increase in annual demand, which is in the form of bars and coins. So that's actually a big signal for us saying, hey, maybe the pure consumption behavior that drives demand in China is maybe gravitating more towards a sophisticated allocation to investment in China. So we're keeping a very close watch on that. Again, also with central bank demand and also with jewelry demand. But it's a really interesting component that's playing out. You know, the real estate market has suffered severely onshore in China. The equity markets had a very, very tough year for 2023, and things are looking quite challenging onshore. So again, gold as an investment, really looking positive.
Yeah, it's interesting. I mean, you know, we're in this environment where you mentioned ETFs and the outflows with gold. Well, we have a lot of inflows happening on the Bitcoin side. And I'm curious, when we look towards the digitization, you know, of assets, and we're thinking about the traditional hedging of gold against economic climates, what do you think is the future here? Do you think this is going to significantly impact gold prices, or do you think there's a place for everyone?
So our analysis historically, when you look at the correlation of Bitcoin to risk assets, is that it would fall into that category. We don't have a view on whether an investor should or shouldn't own Bitcoin, but we maybe have a view on is that gold's role in a portfolio is distinctly different to that of Bitcoin. I think the added attraction to Bitcoin today that's come in the form of ETFs being approved and listed in the US has given it a lot of immediate attention. There seems to be a lot of money moving between products, and the growth of the ETF has been, ETF space for Bitcoin has been strong. However, we have no empirical evidence or no data that to demonstrate to us that anything that's happening with gold and the ETF market for gold has changed one bit. I think that that's actually been a really interesting piece of information that we've been able to see. We haven't had clients in conversations about switching from gold to Bitcoin. Quite the contrary, when people think about adding an element of Bitcoin to their portfolio, they look at it as a risk asset, and it actually takes our conversations to whether or not the allocation of gold should be increasing in terms of the diversification that you bring to your portfolio. And I think that the market for Bitcoin and gold pretty different and pretty distinctly different. Now, as far as technology is concerned for the gold market, which I think is a really interesting topic, you know, we've been working with many members of the World Gold Council. We've been working with the LBMA, and we've been working to bring track and trace and technology to help understand the sourcing of gold, bringing that onto a platform where it can actually lead to further opportunities to digitalize gold or dematerialize gold in this context of bringing more trusted and more transparent ways of accessing the gold market. And ultimately, those developments are taking place and really exciting stuff. I think, you know, the tracking tracing is key and critical for gold. But I also think that, you know, the digitization of gold and the future that it could have in a world of, you know, technology, it's a really interesting time for gold. It's not being left behind because it's not available in the digital context, But actually, I think it's actually very interesting to see that technology and how technology could be used to advance trading, access, and tracing and ownership of gold can actually be much more comfortably understood by the investment community.
Right. Much to what you were just speaking about. I mean, I've been talking to a lot of people, and interestingly enough, there's a lot of younger eyeballs coming to the gold market because of Bitcoin and because they're understanding what a hedge against the economy is. And then you have the alternative people that are they don't want to be tracked and traced. Frankly, they want their gold to be in the closet and no one knows where they got it and where it's going to be and how much they have. So how do you balance the two here in the bigger overall picture?
Well, one of the big features of the gold market is that it is a physical market. And actually, if you want to have that ownership and that possession of gold with you, that you can make that decision. I think what's important, though, is that when you take that physical ownership, that the technology is there, and we're working with the community that I talk to about bringing that to life, so that you know that when you do take it in physical form, that you can actually trust and track where it has ultimately come from. And we're not simply saying that you need to leave all gold in a vault or in a product. What we're simply saying is let's make sure that you can trust it and you can understand its history of where it's come from. And ultimately, if you choose to have it in physical possession, you can do so. I think that's a distinct difference between cryptocurrency or digital assets in that context. We want to make sure that the asset can be better traded. The pools of liquidity can be tapped into by all investors, and really just kind of get to a point where we can enhance the gold market and make that physical nature, but also the nature in financial instruments and digital world open to all, and actually easier and faster and quicker for everybody to get access to it. So this is an initiative that we've got that's global in nature in terms of really bringing gold bar integrity to life through our program with the LBMA. And I think that what you'll find is that it doesn't just serve one market, it serves all markets: China, India, Asia, Europe, the US, all markets worldwide.
Yeah, no, fascinating market indeed. Looking ahead here, the report suggests a cautionary optimistic outlook for gold in 2024, with potential shifts, obviously, in investment patterns, as we've been discussing, and central bank buying. And we also have many countries in an election cycle this year. So given the current economic indicators, such as the CPI data that I just mentioned, what are your price predictions for gold in the short to medium term?
So your point around the elections is a really interesting one. Elections, political shifts could lead to policy shifts, could lead to geopolitical issues. Lots of different things to keep an eye on, and we're tracking at least 30 elections to see what it means for the potential for price and the price movement of gold and how it could impact the supply and demand dynamics. I think short-term elections will come and happen, and I think what's important for investors to understand is that for those real changes in the election landscape to take place, they need to actually manifest themselves in terms of more along the lines of policy. So what we would say is keep an eye on the elections, understand what they mean, but understand what they will mean for you more strategically when you start to think about its impact on gold. So for the course of 2024, I think what we think are the biggest items for investors to keep an eye on is, again, that clarity around the monetary policy landscape, really just trying to understand when that rate cut, when that movement on, the monetary impact will make its way into the rate environment, and it'll ultimately lead us to seeing a breakout moment for gold. That's where it's really going to be a big change for us. And I think that what we're keeping an eye on is how the election landscape will lead to the political landscape, lead to the geopolitical landscape. But ultimately, what we're looking for is when will we see that monetary policy lift the headwind that's on gold? So could we see a 5, 10, 20% increase in the gold price over the course of 2024? Yes, but I think it all depends on how things play out from a monetary perspective.
Yeah, interesting. Particularly the Fed. And I mean, we have so much data coming out. We have some more Fed speakers coming up as well. I'm curious, just as a strategist here, I mean, when you saw these December highs, were you shocked? Was there anything that surprised you?
I think that my reaction, and I think a number of people would probably feel the same way, that it probably felt like it was getting a little ahead of itself. Well, of course, it's very exciting. I think that the scenario that we talked to, which is the inflationary environment that we're coming out of, which is quite a unique set of circumstances that has brought it about, and the speed with which people were expecting rate cuts to come probably was a little bit ahead of it. And I think that what we're really seeing now is a calming and a more measured approach to when we could see and expect the rate cuts to potentially develop. So we've moved from January to March, March to June. Let's take it in stride and let's let things develop the way they're going to develop. I think if we're learning anything about the Fed, it's like there's really no guessing what they're going to be doing next. I think they love to keep their cards close to the chest and basically surprise us to both sides, the upside and the downside. And I think that it probably got a little ahead of itself, and I don't think it's a problem for investors. I think if you look, again, the signals are there that the core buying that you see, whether it's through consumption and jewelry, whether it's through bar and coin demand on a global scale. By the way, the U.S. market had a very strong year in 2024 as well, or 2023 as well, with bar and coin demand. So don't underlook that. The central bank continuing to buy. These are signals that are going to keep the gold price held up. It's a question of when we see it breaking out. And I think that headwinds is going to continue to be there until we see more clarity and get more clarity and reactions from the Fed. And I think that's where we are.
That headwind and that resistance that you're talking about, based around that $2,000 level, I mean, I think what you're saying here is we could see potentially, depending on the Fed's analysis or economic data here, maybe a 10% increase on the outlook.
It's reasonable. It's not unreasonable to consider that as a potential upside for gold. Look, I mean, where we are today in the 1995 range and it up to the 2100 level is reachable. I think factors need to play out to make that happen. I think that the biggest one that we want to keep our eye on is, again, the U.S. Fed and the monetary policy in the U.S. But then don't underestimate the tactical moments that gold will perform, or the systemic events, whether they're geopolitical or they are, financial crisis. These are moments that move gold as well. We had two of them in 2023, as I highlighted. So keeping a gold allocation, keeping the course with watching where the Fed goes is very prudent on the part of investors. And let's see how it plays out.
Yeah, absolutely. I mean, the entire report is available online. It's quite fascinating. And, in your report, you talked about there being a notable uptick in gold supply, partly driven by increased recycling efforts. So I'm curious, Joe, I mean, could you elaborate on how significant recycling has become for the overall gold market? Specifically, how does this affect supply and demand balances, and what implications might it have for investors here, and also for mining and the future price of gold?
So the sources of supply come in the form of pure mining that comes from miners out of the ground. And ultimately, when prices get higher, particularly in markets like India, China, and to a certain extent, the Western markets, you see that gold comes out of some form of consumption into the recycling market. So we had high levels in terms of the prices. So it's expected to see that recycling, which was up about 9% year on year, to be a larger component of what plays out in terms of meeting the supply needs. And it's actually quite interesting because what it tells us are a couple of things. Number one, gold's pretty unique amongst commodities. It doesn't degrade, and recycling is a very natural place for supply to be coming from. And actually, what you start to see are holdings of gold, whether it's in the form of jewelry, bars, or coins, whatever the component might be, coming from recycled from technology. These higher prices will bring it to the market. So it'll also be a component that plays into how the demand needs are met. So again, higher prices, higher likelihood of recycling to take place. I think that jewelry is a big component of what that market looks like. I think watching markets like India and others where you really see that behavior come to light, it's an important factor to keep an eye on. I think mining will continue to be the dominant source of supply, no questions asked. And I think that that's been growing at a steady rate of about 3% on an annual basis. But again, higher prices means higher recycling, which means gold will actually continue to have its demand needs met through that component.
Yeah, interesting. I mean, it's just fascinating. Don't tell my wife about jewelry being an insurance, hey? It's clear that obviously gold continues to hold its ground as a critical asset in the financial world. I mean, it's a compelling report, and I insist everybody go and read it right now. Joe Cavatoni joining us from the World Gold Council to break down the latest report. Joe, thanks for coming on and explaining us today.
Thanks for having me. It's been great.
Appreciate the time. And thank you for tuning in. I'm Jeremy Szafron. Don't forget to subscribe to our YouTube channel for the latest news and analysis from Kitco. And we will see you next time.